Good morning and welcome back to the Opportunistic Trader for November 12th, a Monday, Veterans Day. Bond market, cash market is closed. Everything else in the world or in the U.S. is open. The world is open for sure. Want to really touch a little bit on my last trading week, which was not very good. Just trying to put a P on the page, just trying to find a winner. Yesterday's trade, the one was kind of a forced trade. Probably shouldn't have done it. But you got to get back on the horse. We got back on the horse, lost a little and got out. We're still in the oil, which today is up slightly, but obviously we're still down on that trade. We're trying to hang in with hedges. Maybe today we might do a simple option trade. Sell maybe a call or a put spread, put a P on the page, move on to the next. But overall, the markets have been difficult for me to see, but hopefully we'll be back on the positive wagon. As a trader for a very, very long time, the hardest part is when you're not making money is to sort of sit back, relax, and let the trades come to you. It's a little bit difficult. The market divergences have been really, really big. But I don't really want to harp on that too much. We're going to look. We're going to look to put that P on the page and move forward. Overall, we've been trading well over the last bunch of months, so it happens. It happens to everyone. And looking across the board, the Asian markets started strong, ended strong. Our market was up about 15 handles overnight. Coming into the European Open, the DAX opened up about 70 points, has reversed about 250 points off the highs, maybe a bit more, about 240 now. Bounced a little. But they're down about 1.3%. Our market is holding much better, as it always does. Interestingly enough, the S&P is not through Friday's low. They bounced it $10. They actually bounced it $20 at the end of the day with another fake imbalance of $1.8 billion to buy, and then at 4 o'clock it was no imbalance. So they've been pulling that thing pretty much every day. So you got to be leery of that for one day when it sticks. Overall, Apple is the complete underperformer, back below 200, traded above 210. That thing is a really great trading stock, and it moves unbelievably well. It's moving $5 to $7 a day, pretty much every single day. Facebook still above the low at 141-ish when they had the earnings. It traded lower than that. Traded down to 139 after the earnings. Keep an eye on that. But technology, especially on the big techs, look terrible. Netflix is below 300. Google is pressing on 1,000. Amazon's the outlier. It's got down to 1,400. It's now 1,700 or slightly under. Tesla obviously looks strong as well. And overall, the emerging markets are terrible. I mean, even though they were up last night, the stocks in the U.S. are lower. GE has got an $8, almost got a $7 number on it, looking pretty broken. Overall, the straddle is pricing about $15-ish, which is low. Actually, it's about 16, 17, which is low. Expecting a little bit more on the quiet side today, potentially. But overall, not seeing much. The dollar is very, very, very strong. It's on the year highs. The euro's down at 112. The British, which always is between 128 and 132, got up to about 133 or 132, and now is back to 128. 66 on the lower end of the range. Not much movement out of any of the other currencies. Bonds are on the high tick of the day, up 20. got back down to those low yields. I mean, high yields, low prices at about under 3.25, but like 3.23, and now we're back, well away from that. The 10-year note is up a half a handle from the lows, and the bond is up about a handle and a half from the lows. So overall, that market is contained. Oil probably put the low in for the year. We're guessing, obviously not the lows of the year, but the low of this move. Pricing now at about $61 a barrel. The OPEC meeting was kind of, not anything, but they came up with the thing, the market's oversold, and then when it's overbought, it's overbought. So, now it's oversold, and, you'll see what's going to happen. So, we'll keep an eye on that. And I'm joined, obviously, as every day by Vince, and Mike is sitting in with us as well. And I'm going to throw it to Vince for his thoughts on the morning, because I've been talking a lot. So it's on you, Vince.
That's what we're here for. I don't have a lot to add that I didn't already add in precious metals, because actually we had an interesting Friday, or an active Friday, a profitable Friday if you were a bear. I don't. I think today's the type of day where active traders can make money, because there will be some lighter trading with Veterans Day and the cash bond market closed. I think you could see a drop off in liquidity post London today, which is a plus for people who aren't trading as large as Warren Buffett or George Soros. You can get some whippy moves, which might be good. I expect a little volatility to creep into the market for no apparent reason that we can identify, which is just fine by us. Maybe a little bit after noon today. Um, the FX market. The dollar is stronger, as Larry said, on the back of, with the euro and British pound leading the way. Actually, the British pound led the way. It's bouncing a little bit now, or has bounced last couple of hours. It's coming back off again. But the Brexit is in the headlines again, and not delving into it. The data is there. I'll put a post up on that later on today. But for those who are interested and not too completely fatigued at reading about it, but voices from the wilderness are coming out. Boris Johnson starting to reassert himself, fomenting a little panic. And I guess Armistice Day is over, and it's back to usual concerns about whatever is going on. On the equity side, the only thing I would add, which is not something that you would trade on an intraday basis, I would focus more on the things that Larry's looking at today, like the straddles and what have you, and good risk rewards. But we are coming into the end of the year, and so three things will happen in no particular order. One, you start seeing banks release their recommendations for 2019. Now, that may not matter to you as an intraday or active trader. I would hope it would matter to you as a person who looks at stocks, that if banks are recommending them and people are putting money into them, then you're going to get some action, whether it be up or down. Then you're going to have some volatility in them. And to the extent that major banks are recommending stocks, we put out Credit Suisse's in a post yesterday, I think entitled Top Picks, and I think our headline said Facebook surprise, and Amazon surprise are top picks in the FANGs, and Apple is auspiciously absent. So not recommending to buy Apple is like recommending to sell it. And knowing all that and reading that, the first thing is recommendations come out at the end of the year. The second thing is funds are liquidating at the end of the year, licking their wounds or booking profits depending on their positions. And the third thing is reallocations come in. So you can start seeing some macro trends in stocks. And if everyone in the world is recommending to buy Facebook, and in the first month of the year or the last month of this year, Facebook craters, then I get a feeling that's going to be a bad year for Facebook. So trade accordingly around that in a macro way. But I like to trade things like that. So, for example, if you're a pairs trader, if I see a bank that's respected come out and say buy Facebook, but not say sell Apple, to me that's basically, if everyone's got their money in Apple, then that might be bearish for Apple. They're going to rotate out of Apple into Facebook. So I would look for a signal or a reason or another correlation to be short Apple. And these are just things that a top-down type of trader does. That's the color I can add for today. I will add on the oil side that about midweek last week, if you look at the committed traders, it goes through Tuesday. Managed money has gotten aggressively short. They've kind of reversed on a dime their positions. So if you believe that the money trading now is not the bigger money, it's the smaller money, as the bigger money rolls up their positions for the end of the year. And a lot of funds do close at the end of November. Then you got to think that maybe the money trading now is going to be hotter, more algo based, and a little bit less tolerant of pain. So we may have a clearing to be bullish in oil for the rest of the week. Whether you think the OPEC action is enough, not enough, too much, or none of the above, simply because if you look at the commitment of traders chart, managed money's gotten pretty short pretty quickly in oil. So maybe it's some stops to be had.
Yeah, I think you're pretty much spot on that. I wanted to just get a quick takeaway on Apple because I just saw it trading in the 198 handle, and it's interesting to me, with their guidance and what they did and their reporting now and how they're looking at everything. It kind of maybe means, in a way, it's the end of a cycle for them, and maybe the reason why they're not doing any of the stuff they were doing before is because they see slippage in creations of new phones, new ideas, and potentially upgrade cycles. As far as, like, I got the iPhone 10. I don't know, unless something crazy comes along, why would I change my phone? The only reason why I changed from my iPhone 7 was because it broke. So I
Yeah.
I don't know, maybe my I don't know how my iPhone 10 is going to start operating not efficiently, but I'm sure it will. But if you really look at the difference between an iPhone 8 or 7 or whatever and what I'm dealing with today with the new phone, it's not very much. It's not really anything. Oh, they always say, "Oh, it's a better camera." Like, I don't know. What am I taking pictures of? I'm not a professional photographer. So I don't know, why they did what they did. I do know, because they don't want to be held to the stone every single month and every single quarter. But, it just seems scary to invest in a company where you're really not going to know an outlook at all until the earnings print, for the most part. So I think people are a little nervous about that in general, and they can't get a good sense from the company what's going on. So that's why you're seeing 3% moves and $5 moves almost on a daily basis. I mean, I watched the stock trade down to 198 and then back up to 210, now back down to 198. And it'll be interesting to see if I'm sure Buffett didn't sell a share. It's just a matter of whether he bought more again. So maybe he's buying, under 200 or whatever. But, Apple, to me, it looks like a great day trading stock, and it looks like it's in a bit of trouble, in general. If you had any thoughts on that.
Oh well, I think if you're looking, uh, well, I've been saying for a while as a joke, but I think I might actually be right, even though I was just being sarcastic for about a month, saying that Apple isn't a FANG. Apple's a big cap stock. And to your point about starting with your own personal experience, Apple's in the new and improved phase, where they're not really doing much to improve or innovate. And I'm not saying that they don't have something else in the offing, but the phone itself is a driver of their free cash flow, and the the new and improved Tide concept is basically what's going on with the iPhone. Like you said, the only reason you needed a new phone is because your phone was broken. And I am actually still on an iPhone 7. I haven't
Well,
stepped on mine.
on that, guys, I actually just posted in the equity room. Bernstein came out with a report this morning basically saying that the iPhone units may fall by 6% per year because the products actually is a little bit better. And so people aren't going to have to replace it as often. In the past, it was about a year and a half or so, and your phone would really start slowing down, and you need to kind of upgrade to the iPhone 4 to the iPhone 5S, and then the 5 to the 7, and then the 7, and they're saying that it's actually a much more solid product. The more recent ones that they're expecting a 6% less
Year-over-year buyers because they don't have to rebuy.
Well,
Right.
it's interesting, and it's interesting in general to look at, like, my iPhone 7. What was happening was it wasn't charging. Like, I couldn't even go a half a day without.
Well, that's what it was in the last few cycles. It's been like a year and a half, or about a year, things start breaking down a little bit. And it was almost, they were saying, oh, these forced upgrades. Hey, all of a sudden after you upgrade, you got some issue. All of a sudden, oh, my phone won't charge. Why'd they do that?
Exactly. Apple knew what it was doing. Obviously, it's like the light bulbs in my house. I mean, I could talk to someone on my iPhone, through the video, and but my light bulb blows out every every 6 months. So I think they understand their game, and they're playing it. They're playing it. But I think the stock's a great trading stock right now. I'm very, very, impressed with the way the stock trades on a daily basis. I think people could be in there every single day, trading it. So, I didn't know if you guys had any thoughts. These are some critical levels in general here. So it'll be interesting to see on a.
I know Tom was looking on that on the idea of pure technical and the levels itself. Tom, for weeks and weeks and weeks, has been talking about a retest of 192. He's bullish, but has been saying at that 192, that's the kind of level to reload on the long side. But he thought that there would always be a retest of that 192 level, and he structured some option positions that way. Yeah, I mean, even when it was trading above 220, he was looking at 192.
What was the 192 level?
I just think past, when it really broke out through 200, I think it was also coordinating with a prior earnings release where there was a gap, things like that. But that's what he's been looking at for a while. And based on the way it's trading right now, could be in the cards. We had that weak earnings release. They kind of talked about, like you mentioned before, not giving as much guidance. And we're also volatile tape more. It's interesting, and I'd like to hear more from everybody else as well, that we're speaking to all through the webinars, and Larry and Vince. We have seen a bit of a rotation, small, of technology underperforming, and financials doing a little bit better, healthcare doing a little bit better, a few sectors trading a little bit better, whereas for at least a year and a half now, technology has just been on a tear. And so any thoughts there?
I just think that it's just getting things back in line. It's been an overperformance for a while. I think really the trade going into next year potentially is being short technology over being long, big cap technology potentially. Just my thoughts. Overall, the markets. Hold up, obviously, we're back in this better thing. I'm looking at the DAX down 1.2% and the S&P down 20 basis points. So we're back in that mantra where these markets, for whatever reason, can't go down. So, and now you have oil, got crashed in our market. Literally, we put that chart up, Mike, for like the last week, is oil over S&P. I mean, it was like two different charts. Again, I've never seen anything like that, but that's, that's sort of what the computer was set up to do. So
Yeah, Tracy had some nice charts looking at the divergence of that, the S&P versus crude, because I have the two charts up right now, and her chart is much better, showing the divergence of one over the other. But you could see over the past 10-ish days, S&P was down the last few days, but over the past 10 days, equities bounced and crude just continued lower. It'll be interesting to speak with Adam Collins today at 1:30 to get his information on the latest CO2 report. I know Vince alluded to it at the beginning, that crude has flipped to heavily short from just 4 or 5 weeks ago being heavily long. So it's interesting to get that large of a flip in that short of a time in such a big product. So it'll be interesting to speak with him.
But
on
interestingly, on something like that, he came on a couple of weeks ago and he was talking about nat gas. Stuff could stay like that for a really long time. So yeah, it's nice to know the positions of what's out there in the marketplace, but sometimes the positions or the headwinds are so strong that it almost gives it like a snowball effect. So in general, it's interesting, and those are great things to look at, but sometimes it acts as snowball the other way.
Well, you also take a look at nat gas, which over the last 2 weeks has been heavily long specs, and nat gas just continues to rip higher. Right now we're up 3.25%. We're at 384. High overnight was 390 and 390.7 in Dees. So that one's looking at weather and looking, it was going to be a volatile open on Sunday night, and continues to move higher. It'll be interesting to speak with Bryn and Mike about that throughout the week and hear their comments in the chat room. Nat gas, the divergence between crude, nat gas, RBOB's actually up about 1.75% right now, back at 165 in Dees. But yeah, the products and crude have really gotten hit.
Yeah, no, it's interesting also the divergence between nat gas. I remember trading nat gas heavily in like 2005, 2006 when it was going crazy, but it really traded in a way like oil. Not obviously, it was like oil on steroids. It was like a 3 times oil or 5 times oil, but it would move off of oil, and this move, oil went straight down and this thing went straight up. So it's going to be interesting to see how much more the move in nat gas. Listen, they want a 4 handle on this thing. So if it gets up to $4, it's going to get crazy out there. So we'll keep an eye on that. It got up to 390 today, reversed down. A lot of people that play it, you could play it on the equity front. There's a stock or an indice called UGAS, and that mirrors sort of natural gas futures. So you trade the UGAS, you're getting some leverage into natural gas. I don't suggest that in any way, but I'm not looking at it. But I know people that are in our chat traded pretty heavily, and nat gas is in favor right now, and you gotta keep an eye on it, keep an eye on the $4 level, and see. I mean, when I traded it, it was $12. So 3 doesn't sound so high. It got up to like 15 on that run in 2005, 2006, I think. And then again up into like 2011 area. But overall, oil looks firm. Hasn't downticked this morning. I guess the sellers have been alleviated from the product.
I think the other interesting story on the equity side is keeping an eye on Alibaba. It is right now trading down about 0.75%, but that combination of the technology that we've been talking about, FAANG's under pressure. Alibaba had its singles day, and it was a pretty good showing. It was up to about 27% from the prior year, but they're saying that the year before that and the year before that, it was more like 39% growth and 50% growth. So they're actually saying it's not as impressive. And then they're also saying on the big ticket items that those are also something that was very disappointing. And so, Oppenheimer, I saw, came out and said that that was a disappointment, whereas SunTrust said it was okay. So it'll be just interesting to take a look at, in this market environment, how the market trades Alibaba, see market sentiment, that sort of thing. So keeping an eye on that. And then the other thing, I don't know if Vince has talked about, is the dollar. We're right now at the year's high. Euro's on the year low. Pound is off about 50 pips. So that's something as well to keep an eye on. The dollar, it's not a huge mover, but we're moving higher here. And with President right now talking about trade everywhere in the world, it's the dollar's very important to keep an eye on. So euros at the low of the year, and emerging markets continue to trade higher. Dollar MEX is at 220 and a quarter. So a lot of different things on the dollar side to keep an eye on. It's had a decent mover overnight despite the U.S. bond market being closed, but currency is open.
It's interesting. Last year, the dollar mantra was the exact opposite. I remember last year, every single day, the dollar was getting smashed. What did the dollar index trade down to? Like 78 or something?
No, not that far.
No?
We're right now at 97. We
What did
probably
it trade
got
down
down
to 82? Let's look, because I know it was low. Maybe I'm off a little bit, but I remember it's low. It was getting hit every day. Maybe it was 88. Anyway, we'll look at it. We'll give it to you guys. But overall, in 1 year, literally the dollar has flipped, and now everybody wants to be long U.S. dollars.
That's the key part of it, is that it's just the flip. Last year, euro traded up to about 125, and there were all these reasons not to be long the dollar. Now, it's the U.S. is the high-yielding currency, dollar's strong, and there's only reasons to be, long the dollar, it seems like.
Well, the British just rallied 50 pips, so it's back in the range. It's 129.16.
Yeah, it's a big figure off the low. We traded down to 128.27, and we're at 129.20.
Exactly. It's never moving until, I don't know. The Brit exit, I've never seen anything take this long. They're not even close. But overall, you know what? Maybe, I don't know when the next vote is. They'll probably put up the referendum again to go the other way. So, I don't know. Who knows? And maybe by then we'll have the Florida recount done. We're in a recount for Senate seat and the governorship. So we'll see how that rolls on from here. I think they're going to court. And overall, looks very quiet out there. It's going to be a quiet day. Straddles are telling you that. They're pricing.
Where is the straddle now?
Straddle's 15 bid. 15 bid on the 75 straddle. It's probably a sale. Maybe look to do some call spreads today or put spreads. But we'll give it in the chat. I just want to be very careful. I want to make sure, my trading, I'm starting to see the ball better. And, again, when you get into a little bit of a rut, you just sort of take it easy and, just let the trades come to you. And, that's it. From what I'm seeing here. I don't know if you guys have anything to add. You want to go over the schedule today, Mike?
Yeah. So Larry's going to be back on around the open and around 11 a.m. If you have any questions throughout the day, ask them in the chat. 1 o'clock, as we talked about last week, we're going to have Algo Ledge, who are cryptocurrency experts, talking about just the latest on Bitcoin. It's going to be about 20 minutes just on, what's going on, because we really are pinned at the 6,500. So get some insight from them.
What's interesting about that, though? I think it's, it's weird. It's really more in the 64 or 63.50 level. Some of them are priced differently. So, when I look at it, like I'm pulling it up now, and it's one is 63.50 and the other 64.50. So I don't know which one. Maybe there's a good arb there, but somehow I think the machine isn't right. But in general, that's not really the question that I want to really ask him. I want to ask him what happened to the volume. Literally, I was looking at Ripple Coin, and he used to trade a lot on the weekend. It had like volume over the weekend of like $4 million of volume. That's really, really low. So I think there's no interest in the product. I think it's trying to become a product that's not traded, that it's actually like a currency that's going to sit at a price. You know what I'm saying? So they'll just have it at 6,300, and if you go to Walmart and you use Bitcoin, you have 6,300 is the conversion rate. So that's what I think they're trying to do. I don't think it's going to work, but that's what I see. You have any thought of Bitcoin, Vince? Or
Yeah, your point is actually valid. When one of the internal battles with cryptos, especially Bitcoin, is when people are trying to extrapolate what the future of it would be when it was trading, 18,000 or whatever, they were saying it's not money, it's currency, meaning it's a medium of transfer. Now that it's been listed, even though it's a tracking, it's a cash, it's not a Bitcoin settled future, it's a cash settled future. The dilemma becomes, as volatility decreases, um, it becomes less of a currency and more of a store of value. Now, I'm not saying it's not a currency. What I am saying is you're not going to create wealth from it. It becomes more of a PayPal product. Uh, uh, the problem with
Is
the
that
reason
really
the
what they
reason
want, though? I mean,
no, well, I'm
oh,
not
I don't
saying
know
it
what
isn't.
they want. I'm just
No,
saying.
I'm not saying it isn't what you want, but it's a matter of what's better for the product versus what's better for the miners. What's better for the exchange? The parallel being what's better for the exchange versus what's better for the locals. And the miners want the price of Bitcoin to go up because they mine it. They're floor traders and they have memberships and seats. But the people that have bigger picture in mind are looking for price stability so they can I don't know what going public means for a money, but so they can expand and make it more efficient. So it is a culture war, I think, that not a war so much, but a culture decision that has to be made. Like if you, for example, uh, uh, the comparison, and it's not a fair comparison, but the similarities to gold are if it's stable, it can be a store of value. Okay. If it's not stable, it can be a currency, meaning a transfer from dollars to something else if you do it quickly, but it's not a place you park your money. And uh, uh, so the less volatile it is, the more it can be both. Okay. And there is a place for this going forward, especially as fiat currencies or paper currencies come under scrutiny. Um, but the reality of it is, uh, uh, the Bitcoin, the concepts are valid. The products may not be a couple of years from now, but the problem is not necessarily a problem. It's an evolution of the product or maturing of the product. So it becomes less of a wealth creation. It's kind of like the first people into any new thing. It gets hyperbolic in price. And then now I think Bitcoin, and I say this, from partial ignorance because I haven't paid attention to it much since actually 2017 when I said it's a sale as soon as it gets listed. Because I think the stability in price is the rogue, not the rogue, but the bucking bronco being controlled or regulated by the government for investors' benefit. So the next leg up, if there is one, there should be one, because it is not something that you can just create. There's a limited amount of bitcoins out there. Uh, uh, should be in a more orderly fashion. So now it's something you can invest in for long term, possibly. Now it's still something that you can exchange money in because it's less volatile, to your point. And but now it's not something you expect to create wealth in. That's something you create wealth in. Would be your pot stocks this week, I guess.
So
Does that
you're
make any
you're
sense?
saying this is just a payment system.
No, no, I'm not saying it's not just a payment system. I am saying that it has an identity crisis. Ideally, it would like to be a payment system as well as a store of wealth, which is what a currency is a payment system and a money is a store of wealth. So you could argue that gold is money, but gold is not currency. You don't use it to pay for your ham and cheese sandwich. You
Yeah,
know,
but this
uh,
is, listen, again, I don't know, but this is used to make illegal payments. If I want to go to the store and buying a fishing rod, I'm using American Express or Visa or MasterCard. I'm never using Bitcoin. Why would I need to use Bitcoin?
Well,
That would be the
that's
point.
you, Larry. But there's a lot more people that are accepting Bitcoin now online for online transactions. So
Really?
for transactions that cross borders,
Yeah,
Bitcoin
you're right.
is more desirable, even if you're not dodging taxes. I'm not saying that it's not used for things like that, but that's certainly not the majority of the trade in it. It's still such a small product. But I'm not. I'm saying that it can be. Ideally, it becomes both. Oh, I'm worried about fiat currencies. Well, Bitcoin is stable. I'll put it into Bitcoin because not because it's electronic or because it's cool, but because there are a limited number of them out there, like there's a limited amount of gold. On the other hand, there's the guy who says, well, I want to transfer money and buy something overseas, and I don't want to have to worry about exchange rates. I'm going to take my dollars, put it in Bitcoin, and this guy accepts Bitcoin over in Vietnam to sell me something that I'm buying. So I'm going to take that. We don't have to worry about exchange rates. And hopefully the Bitcoin market would reflect the exchange rate. And that becomes an international money in that sense, much to the chagrin of the IMF. I'm just saying it's got possibilities, and low volatility actually makes it become on other people's radar to use in different ways.
Well, I think it's being manipulated. And the thing is that people create, like, we've seen this, Mike and I, people have come to the office and, like, there's a guy in South Florida, he's got rooms filled with this, and they get like a quarter coin, a half a coin. Like, that's like free. It's not free money because they got to pay for it. But if they sit on it, and this is what I think happened to a lot of people, was they were mining the coins for a certain number, and they're like, I have leeway in this, and they never sold. And the next thing you know, we debacled, and they're underwater on their cost. And now, we always get a fake thing on how much it costs to mine a coin.
Well, a few things on that. And, this is a great conversation, which we're going to have with AlgoLedge later. But, one thing on that is that's part of the, you were asking before about volume. There's a natural seller every single day in Bitcoin, and that is the people that mine it. As typically, the more disciplined firms, what they're doing is they're mining it and selling it basically right away. But yeah, of course, if it's at 15,000, you think it's going to 18,000, you might mine it and then hold it, and then all of a sudden it's 13,000, 12,000, and
about 6,000,
right.
And now you're underwater. But yeah, I mean, listen, the funny thing is, we get differing opinions on this, or differing fact of how much it costs to mine a Bitcoin. So I'd like to ask today AlgoLedge what it costs to mine a Bitcoin, because we've had people in our office, and he would say he was mining the coin for 800, was trading at like 5,000. I'm like, I would have as many coins as you can, but that just puts something even more interesting into my thought process. Is maybe this thing is even less wanted or needed or traded by people, because that's the natural seller. So on a weekend, people are working and whatever, and when the Bitcoin volume is 2,000 Bitcoins, maybe, I mean, that's just showing no speculation. That's natural sellers.
Well, I think there's two things. I think there's a lot less day trading, because I think a lot of those guys lost some money, and or the volatility means that there's just not as much opportunity there. So there's a lot less day trading. There is that natural seller every single day. But yeah, it's an interesting market. We'll see. Like, remember that, there's, I think it's much more expensive to mine. And what makes it much more expensive is that you're getting less coins than you would have gotten 2 years ago when you mine it. And B, it's more expensive on the energy side. So those are some factors, but yeah, it'll be interesting. So that's 1 o'clock. Speaking with AlgoLedge there. Then we have 1:30 Adam Collins. But I know that we wanted to talk. This it'll be interesting, because this is about a year ago now is when crypto took off. So we'll see. Last few times they've been AlgoLedge has been I don't want to say pessimistic, but they definitely haven't been bullish crypto. So it'll be interesting to get an update now that we've been hovering around here for a little while.
Yeah, I'm just, I'm trying to understand, just in general, how every time I look at this thing at 6,400 or 6,300, I mean, it's a $6,000 product. It hasn't moved 100 points basically, or 200 points in 2 months. It's like locked. You don't even have to look at it. You'll know tomorrow where it is. It's very, very strange. So, again, and they got 5 zillion altcoins that I don't know what they're ever going to do with them, but we'll see. we'll see what he has to say. I'm interested. Today should be more on the quiet side. Our market's holding up unbelievably well relative to the DAX, which is now almost printing on the low of the day, down 151 points. The low is down like 161 points. It's about 250 points off the high. And we're just sitting, we're down, but we're not through Friday's lows. So you got to watch Friday's lows around 65. Apple, obviously, great day trader today. It's actually bounced a little bit, about a half a buck to a buck. See where that opens, see if it can hold the 198, 197 and a half level, and then we'll look at the Tom McEntee level at 192. But if the market gets skittish coming into year end, Apple looks the heaviest of the bunch. So I would keep my eye on that. And other than that, we're hanging in. We're looking for ideas. Oil just dropped off a bit, so keep an eye on that, and we'll be back to you right after the opening with some other thoughts. And I wish everybody a great trading day today. Again, I think it's on the quiet side, so lighter volumes, so be heads up. So good luck, everyone, and we'll be back to you later. Vince, thank you as always.